All right. Good afternoon, everybody. Welcome to the weekly take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investor Business Daily. Please take a moment to read the disclaimer. I'm not licensed. Can't tell you what to buy, what to sell, what to hold, et cetera, et cetera. Okay, so we'll do the same stuff. We'll talk about the indices a little bit. We will go through the industry groups, stocks to watch. I think I'm going to spend most of my time there. In fact, I'm leaning towards dropping the industry groups because I was just writing down a bunch of tickers, and man, there's just a lot of stuff out there. Not necessarily actionable, but just stuff to observe. And then the quote of the week. So did I get that right? Okay. A friend of mine sent me a sheet, like a tear sheet from Capital Group. I thought was interesting. Look back at the S&P since 1928. Market is positive 73% of the time. I don't know if I'd have guessed that high. I think I'd have probably guessed maybe like 65% of the time. So in other words, negative years are only 27% of the time. The S&P has gone up more than 20%, 38% of all those years. That's a pretty good number. 0 to 20, 35%. Minus 20 to flat is 21% of the years. And ending the year down more than 20% is only 6% of the years. So it's very unusual for you to have like a really bad market. But they come, but they seem to come in, 10, 12-year waves. Decline now during the year, though, declines of 10% or more occur about every 18 months on average, and declines of 5% or more occur twice a year on average. So you're just going to have little downdrafts as a given. 5% twice a year on average means you could have one year, you get a 4 the next, or something like that. I remember being on IBD Live on the DeepSeek news and talking about when the market was getting hit hard, how a guy that I follow on Twitter would always. I remember him tweeting in like the crisis, the banking crisis, not the great one, the GFC, but the one with like Silicon Valley, et cetera. And he just kept tweeting, crisis equals opportunity. And boy, was he right. The market just rocketed from there. So anytime the market's down bad on news, to me, I try to change my mindset. That's a crisis and it equals opportunity. That doesn't mean you have to run in there and buy that day, but I want to get offensive, especially if I'm lightly invested, which tends to happen for me, because if the market's going up, I'm going to peel some off. And then if it all of a sudden there's a bad break off the highs or something like that, I'm probably not going to be fully invested. Like I was listening to IBD Live and they were all talking about how fully invested they are. And I was just thinking of how lightly invested I was, because this morning the going was too good. I was just hitting the bid on a lot of stuff this morning, especially the stuff that I owned. So that I end up being a little bit more lightly invested than I was, for most of the last handful of days to weeks. But that's just how I do it. And I might get left in the dust, and I'm okay with it. But so crisis equals opportunity. When you see something like that, think about changing your mindset to, what's holding up? What stocks don't want to go down? Palantir, I will pull that out. It came down to the 50-day during that crisis. The double leveraged Palantir ETF that I bought near the 50-day is doubled from there. Now, of course, I'm not in it for a double, but again, what an opportunity that was for me. I mishandled that, but the opportunity was there. The percent of total index market cap, I don't know if I cut this screenshot poorly, or it's like a percent of what, right? But basically what this was US stocks versus the world. And it's just US stocks just dominate the world indexes. I think that's what this was. I probably should have removed this, but it's too late. It's in there. Maybe I'll revisit it next week. I'm pretty certain this was percent of total index market cap. I can't believe I messed this up. Well, let's move on. Let's stop. I'm going to stop myself out of this one. All right. Sentiment. Another thing I find very, very interesting. Sentiment actually got worse. So as the market is within inches of an all-time high, more people got bearish. I don't. That's unusual. They normally it goes the other way. 28% bulls, 24% neutral, 47% bears. This is the AAII sentiment survey. I think that's it for that. Okay, so let's pull up the indexes. Let me turn off my camera so that you can see the charts better. So here's the NASDAQ. It is 1:25 my time, Pacific time. So basically, we've been closed for 15 minutes. This should be up to date. And it just looks like it wants to jump out of this area. Now, if it does and can't hold, then I'll change my tune. So if it tries to do this and comes back down through there, I'll definitely change my tune. Anytime market tries to make a new high and can't, that should be a warning sign for you. But it's hard to be bearish when I look at that. Doesn't mean I have to be fully invested, but I don't have a single short. I haven't had a single short for handful of days to weeks. No, I take that back. I was short Tesla. I was at a single short, but mostly I was like 90% long, 10% short, which I probably is a little light for me. I prefer to be something more like 80-20 or 70-30 or 120% long, 30% short or something like that in the margin. And here's the S&P just sitting there. It just looks like it wants to come out of there. I think it's going to try to come out of there, and then how it handles that will be really key. Now, if the S&P and NASDAQ come out of there, but the Dow can't, that might be another tell. Look at the relative strength on the Dow. It's pretty poor. So these are the little things I look for. If I had to trade the indexes, I watch the indexes, but mostly I try to just focus on the stocks that I own and the stocks that I wished I owned. I think they tell the best story, honestly. This isn't news to you guys. I've said that 100 times. So let's start with all the like the leaders. So you have App gapped up on earnings. The earnings, look at that. The quarterly earnings are really good, really, really good. And had good action today. Like it didn't look very good yesterday. I don't want to say it looked poor, but it didn't look good. It looked like maybe it was running into some resistance. But then today it got back all those gains and then some. So acting very, very well. Is it extended? For sure. But extended means nothing. Doesn't mean they can't get more extended. If you own it, great. If you don't own it, I don't think you can own it properly here. Maybe you can just decide I just can't stand it to watch it go up and buy it. I can't say I've never done that with, but I haven't done that with App. Twilio. So then this is why you don't do that, right? So you just can't stand it. You buy it and then it gaps down. I'm not sure I understand. I don't remember why did it gap up if it was just gonna, here's the earnings. Did they pre-announce or something? I don't know. I don't follow Twilio that closely. But there must have been some kind of news here, 500% increase, and then it gaps down on earnings. Maybe, why would they pre-announce eight days before? So I apologize. I don't know. I don't know why it did that, but this had pretty poor day, and if I was in that, I would be out, regardless of where I was in that one. Let's look at Hood. So another gap on earnings, acting really well. Look at those quarterly earnings, really, really good. I once had an account at Robinhood. It wasn't much of an experience. Maybe they're better now, but a lot of young people probably are okay with it. But the numbers are really, really good. So, and then you've got like Interactive Brokers. Comes out of that cup with handle. And so these stocks are all, there's showing no signs of slowing down. they're not really buyable by the standard pivots or anything like that, but they just kind of give you a good feedback on the overall market. Affirm, so it gapped up on earnings, coming out of the base, holding the gap. UPST. So this one looks worse. If I had bought that, I'd be out of that one. So Affirm is holding the gains, UPST not so much. About like Hims and Hers. So extended for sure, 85% out of this base. But man, it's just, anyone that tells you breakouts don't work, well, they don't all work. But if you lose 7% when you're wrong and you make 85% when you're right, how often do you have to be right? 1 in 5 times, 1 in 6 times, 1 in 7 times. So this one's acted pretty well. Again, extended, look at the weekly. It's made a big move. If you own it, you can kind of keep it if you want. It's hard for me to say what I would do because I'm not in it, but I would probably be out. I'd probably be selling at least some, taking some of the gains. That way I could stomach any part of a wild ride that might occur. The big boys, Broadcom, not doing nothing. This stock's, I've never is a tough word. I haven't really owned this stock because what happens is it tends to go sideways for a long time, report great earnings, goes up, goes sideways for a long time, reports great earnings, goes up, goes sideways for a long time. I don't know. Let's see if they do that. But, you look back and it's like, how come I never made any money in it? Because you just had to kind of buy and hold it. So sometimes there's stocks like that. This is one. I think this is a buy off the 200-day. I bet if you look back, here's the 40-week line, 40-week line, 40-week line. This living under here would have kept you out, but maybe you could buy it back above the 40-week line. And so I'm not good at that. I consider here, 40-week line right there, 40-week line. So this to me is like a 40-week line stock. I'd like to get better at that, but I haven't yet. Palantir. So gaps up on earnings, runs, gaps up on earnings, holding, they're doing nothing wrong. Now if I owned it, I would be trimming for sure. But that's a style thing for you guys that happen to have that one. Reddit reported earnings, and it looked a lot worse in the pre-market. I think it was down or after hours, like 175-ish, but it held up pretty well. But it looks tired. I would be gone if I was in it and just let it do its thing. Maybe this is the left side of a 14-week base or something like that. Now, if you own it $78, you want to own it, you've earned the right to just keep it and just try to sit through a base. I'm not good at that. I've never done it. And so, but I have heard of people doing that. Kind of like people who have seen Bigfoot. Allegedly, people have done it. Charles Harris tells a great story, one of my favorite storytellers of the time. He sat through a base in Apple. Gosh, I wish I knew what year that was. Such a great story. I remember when it was. It's because First Solar ran up, and he said he missed First Solar because he had all his money in Apple. So 2007-ish. Oh, down here maybe early in the year. So I think it was this base where he had bought Apple here and ran it up, and he decided, I want to sit through the base. I want to be like Bill O'Neill. And it turned out to be a 42% base and just wore him out, especially at double bottom. I mean, right when you think you've survived the base, it goes down and makes a new low. Really brutal. And I can't remember how he handled it. I think he was able to hold on, but he was like, never again, because he sat through this long base. By the time it got all the way back here, that was, from January 2006 to November. And there were some stocks. I think First Solar was one that ran that he was like, I could have had my money in this one. Was it Southwestern Energy? Oh, it's not around anymore. But anyways, you get the idea. There's an opportunity cost, and it's impossible to know in real time, but definitely to sit through a base. If you think there's going to be a base, there's an opportunity cost potentially of sitting through that base and having that money in another name. All right. What else do I want to read? Oh, that was just Reddit. Nvidia. So today it was interesting. I was tempted to buy Nvidia because it sure has been showing strength. You've got earnings in 12 days, but I just decided not to, and so I'm not in this one, but I'm definitely not short it. I think it's a market perform. I think I've said that before. It's just going to do what the market does. Amazon, right on the 50-day, another market perform stock. Apple, this is a little surprising to me that it's come back here. I think Apple is a short, but right now it's the market's too strong. I don't think you want to be short stuff. So if the market turns, it'll be one of my go-to shorts. I like it because it's big, it's liquid, it's not going to get bought out. I'm not going to make a bloody fortune shorting it. Whereas if I shorted, Reddit or Palantir, they might go down 35%, but that's okay. The big money's made on the bull side. Meta. So I think this is a record for S&P stocks. This is 20 days in a row blue. I was reading somewhere that it tied the record yesterday, 19 days in a row. And so I think 20 days in a row blue. Somebody was asking about the ants. How come it's not ants? And it's not quite percentage gain. I think this is about 17 to 18% gain, and you need at least 20 for the ants to show up. But you can see, I think Mark Minervini tweeted that he owned Feng Yu. I thought that I saw that. Definitely, he owned, it was some type of ETF on Fang stocks. And so it might have been this one, and it just looks like it's going higher. Coin. So Coin looked good yesterday. It had a great report, but the stock went down 350 up 138%. So this just looks really sloppy to me. I don't think I can't remember the last time I've owned Coin. Just sometimes I'll look and you can look at this chart and just eyeball it. You can do the ATR like Mike does, but I like to keep it real simple and quick. And I just look at the chart and every bar is look at that 10% bar, 10% bar, up 7%, 31%. That's, big move. 3.5%, 8.5%. I mean, it's just every bar is it's just impossible how do you manage your risk? Down 7%, down 8% today. I just don't need it. No, thank you. No, thank you to this name. MicroStrategy. So if the crypto thing ever ends, this will be a gigantic short. I don't know if it's ever going to end. I have been short this with some of those, levered ETFs, and I did okay in them off, coming off of this side, but I haven't been in them in a while because it just looks like the stock's consolidating, and so I'm not in any hurry. I think if it were to break here, I'm gonna draw a trend line, and then I'd want some kind of confirmation from the market. But I don't understand the crypto, so I'm not going to buy it, but I'm also understand that a lot of people believe in it, so I don't want to get run over either. So the market's not about facts, right? I think I used that as a quote once, Steve Clark. The market is not about facts, it's all about people's opinions and positions. Anything can be at any price at any time, so I have to keep that in mind. This one hurts. This is a good lesson for you out there, TEM. So on this day, I'm pretty certain that was Monday. I had read overnight that Nancy Pelosi, the senator, congresswoman, I apologize if I messed it up. She's one of those for sure. She's a senator, I'm pretty certain. She had a position in it, and I put an order in on Sunday night to buy TEM. I think my order was like 40 or something. Remember, it closed at 35 the day before. And I put my order in at 40. I didn't get filled, and I just gave up on it. What a disaster! Limit order, limit profits. It's doubled from there. Now I wouldn't have had a double, but if I had just go buy some, just buy a couple hundred shares at the market, and then see what happens. That's how I should have handled it, and that's how I normally would handle it. And I messed that up. And if I had a couple hundred shares at 43 and then it's 44, 45, 46, I will reverse pyramid Nicholas Darvis style and go from 300 shares at 43 and buy 1,000 at 45. I'm okay with doing that. It'll jam my average cost a little bit. That's the downside, but I'm in motion with the stock, and then I'll use the stop obviously if I'm wrong. So that's how Nicholas Darvis would do it sometimes. He just put these pilot probing positions out there, and if it would work in his favor, he would actually buy more of the stock at the higher price. So crazy, great action. Messed that one up. Let me turn off the best fit. Again, partly why Bill, you just, what does Bill say? Trade at the market, at the market, at the market. Another expensive lesson. IoT broke out today. It's hard when they go from the bottom of the base straight into highs because you always expect some kind of handle eventually, but this one's acting really well. CEG, I almost bought this today on the close. This looks like it wants to go higher to me, but you got to be a little bit more patient with this one. VST, kind of the same thing. CLS, I mean, they don't look viable, but does that look like a market top? I mean, crisis equals opportunity. Stock was down 28%. I'm not saying you go in there and buy it that day. I wouldn't. Not the way it closed. What about the next day? Maybe. What about the next day? Maybe. Super maybe. What about the next day? Super duper maybe. They announced earnings. You got those out of the way, and the stock is back. If not there, maybe here on that reversal. So again, crisis equals opportunity. When you see that, it creates an opportunity. It doesn't mean you at that very moment, but it really helps you to see which stocks don't want to go down. Now, I got run over that day in this one. This was a bad one for me that day, and it hasn't really recovered. I think I'm out in the high 60s or something. The stock's 70. Whereas CLS, if I had stopped myself out at 101, well, stock's 30% higher than that. You can see how much stronger it is. So the weakness in the market will help you to identify the ones that don't want to go down. Palantir, right? So here's the weakness in the market, creates an opportunity down to the 50-day, and then comes back and then gaps up on earnings. I was in PTIR buying it down here near 100, and the darn thing, oh my gosh, it's 300 now. Wow, I didn't realize that. So again, crisis equals opportunity. The stock market it's why I love this game. It's not easy. I definitely have it's crazy how tough it can be, but wow, what an opportunity that created, that little pullback. NBIS, this was one that I was in. I sold this morning on the news that NVIDIA, I almost said Nirvana. NVIDIA has a position in it, or they increased their position in it. Bad break, stock down 20-some% that day, I think. Oh my gosh, down 37% that day. Okay, so I was in here, and what happened? I'm out somewhere here because that's what I do. And it breaks 37%. I'm not going to go in and buy it that day, but comes back. Look at this day, very CLS-like. And either that day or that day, I buy it. And then today, I wake up in the morning, the stock's up 10% or something like that pre-market, and I just thought, the ducks are quacking, and I'm going to feed them. Uh, that one, Tesla. So you've got this. I mean, this stock was really getting hit hard on a really good market day, and this is food for thought. If you're going to short, and if you're interested in shorting, I like to sell into strength on the way up, and 9 times out of 10 they go higher. But I also do the opposite. I like to cover into weakness on the way down, and 9 times out of 10, I'm glad I did. So I covered Tesla this day, right there, somewhere near the end of the day, and so it turned out to be a great fill. I just think when you have any kind of profits you can make on the short side, you just do not want to let those get away. Short side is just a different animal in that regard. Um, so if it gets up near here, I mean, honestly, I'll probably try again. And if I'm wrong, I'll stop myself out. All right. What about the Chinese stocks? So you've got like KC. So I sold that this morning. I just can't help myself. When they're up that much, I just, to me, that it's just too hard not to take that off. Um, there's JD. So this is a really good lesson. So I do a lot of things wrong, but this one I got right. I got this one right. All right. So I bought JD on the DeepSeek news. Was it this day? Was that 2-3 or was it 123? Let's find out. Let's go to Baba. I think it was 2-3. I think it was this day. This is important. Bear with me here. I'm going to do a Google search. January 27th. Well, that sure doesn't seem right. That was, boy, Baba was actually up that day. Oh, wow. What a sign. Oh, I know what happened. It was the tariff announcement day. I'm getting my stories messed up. And there was 25% Mexico, 25% Canada, and 10% China. And I remember the Chinese stocks were down, but they were barely down on the news. And I just thought, gosh, if that's bad news, they should be down more. So I bought I bought 3 of them. I bought Baba, and it was somewhere in here before the cup with handle. I bought JD somewhere in there, and I bought Futu somewhere in there. And and what I did is I allowed the market to pull me in, and Futu and Baba acted great and kept going up, and JD just could never make progress. It just couldn't. I mean, here it closed right near the pivot, I thought, and the next day it was down. So I gave up on JD either the next day or this day. I got out and I moved the money into Futu and Baba and just kept those 2. And instead of being like, well, JD has to play catch up, like a lot of people might think, I actually allowed the market to tell me where the leadership was. So I actually did pretty good in these names. Now, I still own Baba. I still own Futu, not nearly in the size, because this is a big move in a short period of time. I mean, the stock's gone from 80 to 1. It's up 50% in a short period of time. I mean, this is a big market cap company. It's up 20% from the pivot in a short period of time. If you look at the weekly, it looks like just the beginning of a potential really large move, but I don't know. We'll have to wait and see. Could use a handle, but it just goes to show when the street is caught off guard nobody wanted to be in Chinese stocks, including me. I hadn't owned them for a long time, and I was a little bit skeptical of them as well. And then all of a sudden, there's a change, right? I remember what Druckenmiller would say is all you need is a change for the market to move. And there was kind of a change. You could sort of feel there was a change in the sentiment towards Chinese stocks. David Tepper came on CNBC, or I don't know if he came on CNBC, but he was on previously. And then they announced that he had increased his position in BABA, and nobody owns these stocks. None of the mutual funds own them. Very few hedge funds that I follow own them. And so it's a classic example of super underowned, and they just rocketed. So now what do you do now? If you don't own them, well, maybe you just don't want to own Chinese stocks. That's fine. I just mentioned 30 other stocks that have done really well. So you don't have to own Chinese stocks if you don't want to own them. If you're okay with owning them, ideally you get a handle. I own enough that I actually hope they handle. But I don't want to get completely out, because I actually thought, this was going to handle, and here was going to handle, and here was going to handle. And BABA, I was certain, this was a little reversal. Okay, it's going to slow down, and okay, it's going to slow down, slow down, slow down. You get the idea, right? That's why you have to kind of give them room to breathe and not outthink them. So every day I think, oh, well, tomorrow it'll be down, and it wasn't. Tomorrow it'll be down, and it wasn't. So now I think, Tuesday they'll be down. I don't know. We'll see. But ideally, they build some kind of handle and give you a chance to own them. If you own them already, then it depends on style. Most of the time, I'm going to take profits. I think if I own, I don't know if I've told this story on this channel before, but probably. Let's pretend I owned 10 Alibabas and they were all up 20% from the pivot. I would take profits on probably 6 of them, just get out completely, like KC, I just got out. NBIS, I just got out. I just took the profits and I'm on. I'll watch them. I'm not going to give up on them, but I just got out. But of the 10, 1 or maybe 2, I'm going to try to hold for a bigger move. So I might massage the position, but I have a kind of a line in the sand of X number of shares that I just will not get out of those X number of shares. It's difficult. This morning, I really felt BABA was going to go down. And, I was down to that X number of shares. You can see the stock opened at 125, 126, and I'm selling. And then, 10 minutes later or whatever, an hour later, it's 120. And I'm like, I wish I had sold it all, but that's just the way I'm going to handle it. And I'll live with it. If I end up giving back a lot of the gains on those X number of shares, at least I can live with it. But by having some, it allows me to find spots to add. It's so much easier, like the TEM story. It's so much easier to add at higher prices if you already have some than if you anchor to a price. I was anchored to 42 on TEM, so I didn't want to pay 44. I didn't want to pay 48. Didn't want to pay 52. Where if I just bought some shares, I'd gladly buy more at higher prices if it looks like it's going ever higher. All right. So I don't know. There's a lot out there. The market seems fine. We'll have to wait and see. I'm open to. I reserve the right to change my mind. Okay, quote of the week. Reminiscences of a Stock Operator. I guess 98% of you read the book. If you haven't, read it. If you've only read it once, read it again. It's such a great read. I couldn't tell you how many times I've read it. I listened to it on audio tape. I bet between audio and reading, I'm not exaggerating. It's got to be 60, 70 times. They say you never grow poor taking profits. No, you don't. But neither do you grow rich taking a 4-point profit in a bull market. So this is the psychological battle that I encounter all the time when I have stuff going up. Is because I want to take the profits. If I think it's Marty Schwartz said, I love to ring the cash register. It's my weakness, and I'm right in that camp. I just love to ring the cash register. So, but how I combat that with that kind of rule, 1 in 10, 2 in 10. I have a special situation. I'm going to try to hold on to that for a potential bigger move. Now, a lot of you might be in the other camp, and so you might say, well, 8 and 10, I'm going to hold for a special move, and 2 of them I'm going to sell. So it's just, you just kind of find the sweet spot for you. Maybe 7 and 3, 6 and 4, whatever it is. But I think you want to, if you're on one end of the spectrum like I am, where you always want to take profits, you got to have some right tail winners in your account, because you're going to have some losers and some left tail losers where they get away from you, like LB. My stop loss was outside the 7% max that I wanted. I don't remember what the number was, but it's more than 7%. So I've got to have something over here that makes 30% or 40% or something to offset that, to keep the account growing. So maybe for other people, they'll have some small losers, and they'll take some small profits on some others to offset those. And it's you're never going to get perfect. I don't know for sure if Baba and Futu are going higher. I don't know, but I think they are. And so I'm going to take that chance. And if I'm wrong and they give back a certain percentage of the move, then I'll have to get out of those core positions. All right. Have a great weekend, everybody. 800-831-2525, MarketSurge at investors.com. We will, I think I'll be back next week. See you later. Bye-bye.